The Bible says, be not deceived. Whatsoever a man soweth, that shall he also reap.
All right, it's 4 p.m. on Wall Street. Do you know where your money is?
How much should I invest?
I really looking for some direction.
Should I hold on to my house as an investment for my future?
What should we do to have money that we're putting aside?
Welcome to Financial Issues, where we align reality with truth. Conservative talk radio you can count on. Financial issues that you need to know.
We face a disintegrating economy, a weakened defense, and an energy policy based on the sharing of scarcity. We will simply apply to government the common sense that we all use in our daily lives.
Now, here's your host, Dan Celia.
Good morning. Good morning. Welcome back to Financial Issues. I'm Dan Celia. I got this thing sputtering here, Devin. That's why I did that. Good morning. Monday morning. Cold Monday morning. I got stranded, not necessarily stranded, but caught up in that whole airport mess yesterday. It was unbelievable. I think they're canceling 3,000 flights today, I heard. But it was more than double that yesterday. Of course, I was a victim of that. I kind of knew I would be, so mentally I was prepared. But you're never really mentally prepared for that. You just think you are, but you're really not. But anyway, it wasn't a very fun travel day. And I text Devin, I guess it was about 6 or 7 o'clock, or I don't know what time it was. And I said, man, I don't know if I'm going to make it for tomorrow or not. I mean, it was kind of touch and go there, whether I was going to be sleeping in the airport or not. So, but I made it. Got in about midnight. Down here, I'm in Tupelo, Mississippi, down at AFR's main studio. So I'm glad I made it. Not the sharpest tack in the box this morning, though. I had no sleep, virtually. So we'll do and yeah, I thought I was coming south to get warmer. I think it was 10 degrees this morning. This morning, early when I got in, it was 10 degrees. I thought I was coming here. But my daughter texted me this morning, said the chill index was 24 below at home with a -2 degree temperature. So I guess I am warmer in the south. Anyway, let's get to the news. We're going to get to your phone calls, so you can cue your call up, 866-300-9298. I want to thank everybody that has emailed me over the weekend. I got an awful lot of, I don't know what the deal was, good start to the year, a lot of great emails, a lot of people thanking me for all the calls, a lot of people thanking me for the way I handle calls. I'm not sure what that means. I mean, it's a positive thing. I don't pay attention to other talk shows and know how they handle callers. But anyway, I take it as a compliment, I guess, or a blessing, and I thank you for that. And we're going to continue to do what we've been doing so far this year. We're going to get to the phones. We're going to try to take as many calls as possible. It seems to be what you all appreciate the most. I can tell by the emails that I'm getting fewer and fewer questions because so many of the questions are getting answered. I get a lot of people that obviously don't listen every day. But we're going to continue to do that and get to as many calls. We've got some economic news that we've got to talk about this morning. I want to talk a little bit because I didn't do it yesterday. As I said to you, I was traveling, got a little stranded, and we had to run a previously recorded program. But let me just talk about the news that came out yesterday and what we can expect for the week as far as the economic news. We did get factory orders yesterday. Factory orders were down from the forecast. They were forecasting a 2% increase in factory orders. The last factory order number we got was a negative 0.5, so they were expecting a forecast of 2. We got 1.8 yesterday. The service sector numbers were down. The service sector numbers were down 53, so they were down about 1.6% from the previous month. Today we got trade imbalance numbers. Great trade balance number, great trade balance number. We were, for November, $34.3 billion. We were a negative $34.3 billion. I'm not sure, but I think that's got to be at least, that's got to be close to a very long 20-year low. That's primarily due to oil. We can thank the oil industry for that because we are exporting a lot less oil. Very good news. Very good news. I love that. I love the fact that we are exporting less oil. And I hope we can continue on that trend. We'll have to see. But speaking of oil was down dramatically. We hit oil, got close to $92 a barrel. It is at 94.01. It is in positive territory. But yesterday morning hit a low of close to 92. It was still 93 and some change, but thought maybe we were going to get into the 92 range. But it's headed back up right now. Primarily, they're saying due to the cold weather and due to supply issues in Iran and Egypt. But who knows? That's where we are. Heating oil is up. What else we got? Natural gas is up slightly, $4.33. Gold is down. Gold looked like it was making a bit of a comeback, and it still might yet today. It's down about $2.60 an ounce. It's at $12.35, so firmly over $1,200. That's good news. Silver over 20 at $20.01, but moving downward, so we could see silver go back below 20 once again. All the agricultural commodities in positive territory with the exception of wheat. Wheat's the only one that is in negative territory. It's down about 1/3 of 1%. For all of you that are in the farming sector and worry about those commodity futures. But the trade deficit, thanks to oil, down. That is some good news. On Wednesday, tomorrow, we get the ADP employment numbers. Friday, this is Friday. This is the first Friday after the last Friday of the month, last month, which means we are going to get private sector jobs coming out this Friday. Now, I don't think there's a whole lot of market activity waiting for Friday's numbers, but nevertheless, we're getting our job numbers and the unemployment rate on Friday. I'll talk about that in a second. Yesterday, by the way, all the Dow indices scheduled to be in positive territory, primarily due to the trade deficit. So they're saying in positive territory this morning when the market opens. But we have the ADP number. I don't place a whole lot of faith in the ADP numbers, but it's coming out. It's expected to be about 185,000 jobs. Yesterday, last month it was 215,000. We came in well below that, the government number. But we'll wait for the government number to really talk about anything because that's the only thing that really matters, even though the ADP number may be more accurate. Consumer credit numbers also come out on Wednesday. That's something that I care about. Not a lot of people care about that. I do care about consumer credit numbers. It's scheduled to go down. That's for the month of November. But if there is any correlation, or if there's to be any correlation between the economic data that we got out last month, I would suspect that it's going to be up. But right now it's scheduled to be at $15 billion. That would be down from the prior month of $18.2 billion. That's a significant downturn. So we'll have to wait and see how that shakes out. But they're expecting $15 billion even. I expected it might be a little bit higher than that. We also get initial job claims coming out. That's expected to be around 340. Let's see. Non-farm payrolls, again, that's the big number. We're expecting 185,000 private sector jobs for the month of December. That is nothing to write home about. They're looking for the unemployment rate to go up. The unemployment rate to go up from 7% to 7.1%. I suspect that is to try to normalize what it really should be. It's a far cry from 7.1%, but it's certainly not 7%, but it's expected to go up to 7.1%. Hours earned, about 0.2%. That's what it's expected to be. We'll wait and see what that looks like. Average work week, hours per week, 34.5. It's been 34.5 forever. I expect it will continue to be somewhere in that neighborhood. That's an important number for me if we're going to have any kind of real economic growth. That's what's coming out this week on the economic front. Home prices edged up again for the month of November. Those numbers out, up 0.1 of 1%. That takes year-over-year gains right now through the month of November. This does not count the month of December. 11.8%. That's by the way, November was the 21st straight month. 21st straight month that we saw home prices going up, and we are at 11.8%, which is the best we've seen since 2005. So that's good news on home prices. Stocks, as I mentioned, are pointing yesterday. The Dow was down 44, the S&P down 5, pointing to a higher open right now based on the overseas markets, boosting sentiment, consumer sentiment coming out of Europe, some very interesting news coming out of Europe. But the Federal Reserve speakers, by the way, yesterday I didn't even mention this. Janet Yellen was officially confirmed in the Senate as the next Fed chairman. She's the first woman Fed chairman ever, and she was confirmed easily. There were 26 votes that voted against her confirmation, but had a vast majority, and she is now the next Fed chairman. So we're going to see some Fed speak today. The Boston Fed chairman is speaking. The San Francisco Fed chairman is speaking today. Someone else. I don't know. There's someone else speaking too. I don't have it right here in front of me. But anyway, that's going to maybe dictate the markets. Again, European stock data coming out much higher. That's primarily due to Eurozone data, weak inflation, and the German jobless rate. The jobless figures came in much better than expected, and that's got a lot to do with what's driving the European market. We're looking at that as a good sign. Something very interesting, also the euro, by the way, the euro picks up some gains after the inflation number on the dollar as a result of some of that data. 866-300-9298 if you want to weigh in. 866-300-9298. It looked like gold prices were going to come back, but didn't happen. Very interesting. I guess I didn't. I thought I had this article because I don't know the numbers off the top of my head. But anyway, very interesting coming out of Ireland. Many of you may remember me talking about Ireland. I said that I like Ireland. I like Ireland's thinking. I like what they've done as far as the bailout. They're totally out of. They've paid back their bailouts. They're getting their banking system in order. They were the first ones. Remember, Ireland was before Greece. Ireland was the first one that got in a little bit of trouble. Ireland was one of the 5 that I had predicted some 5 years ago, that were going to get in trouble. I didn't predict the order right because I had Greece first, but Ireland got into some trouble. That started the whole bailout thing going on in Europe. But what Ireland just had its first, since they've been out of all the bailout stuff, had their first bond issue. They were hoping, and I'm going from memory here, folks. I'll see if I can get it up so I can get the accurate number. You probably don't care anyway. But they were expected to float about, I'm going to say it was about $8 billion in bonds. And so they had this initial bond offering this morning. This is a 10-year bond, government 10-year bond. Now, the reason the government's doing this, like all other governments, is to raise money, right? To shore up their economy, to sell some debt so they have some money in which to expand or grow their economy. Just like corporate bonds, that's the way the bond market works. Ireland puts out these bonds this morning. They were expected to get, like I said, they were hoping to get $8 billion or so. But they ended up with orders for $13 billion. Oh, here it is. Let me just see if I can find this because I know I'm getting the numbers all messed up. But they were expected. I'm way off. That's why this shouldn't. They were expected to sell between 3 and 3.5 billion euros of 10-year bonds. They got 13 billion euros of bonds, which was good for the country because it pushed the yield down. They had so much demand that they could get away with paying a lower yield. So the yield ends up being 3.28% for a 10-year. Now listen to this, because this is important. In 2011, their 10-year bond, 14%. 14%. They went from 14% to 3.28. That's amazing. So Ireland is on its way to try to get out of the mess that they were in. I applaud them. They were the first ones. They were focused. They had the whole country behind cutting wages, cutting taxes, creating incentives for the private sector. It's a great example. Yes, it's a microcosm of America, but never compared to America, but a great example of what can be done. We'll be right back after this. Get to the phones.